This video is brought to you by HalloCasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description. Hello and welcome everyone to our 221st session of HalloCasa. My name is Michael and today I'm talking to Simon Clancy from Tokyo, Japan. Simon is the founder of multiple companies across real estate and oil and gas with over 20 years of experience in Asia, spanning Tokyo, Shanghai and Singapore. He's the CEO of Consortium Property Group Asia, where he connects institutional investors, private wealth and high net worth individuals to Japanese and offshore opportunities. Beyond real estate, Simon has been deeply involved in oil and gas mandates, development launches, sales campaigns, and placemaking projects, always with a strong focus on building trusted relationships and driving value. Simon, thank you so much for being on the show. You're the first person from Japan I'm having on the show. I'm really pumped and excited. Why don't you introduce yourself to our audience in your own words?
Thanks, Michael. Yeah, I'm the first person from Japan who doesn't happen to be Japanese, but maybe one day we can work that out. Thanks, Michael, for having me on, and hello to all the viewers out there. Yeah, I like to consider myself probably more of an entrepreneur of sorts, and probably a bit more of a person who likes to work in the areas of influence rather than, say, being a deep expert. So I'd be careful of calling myself a broker or these types of typical terms that we use. And I have always had a deep interest in commerce, business, design. I actually had studied design at university. And then I think strategic thinking has always been, these sort of three areas have always been my sort of toolkit, my go-to toolkit, which has helped me actually go through what I would call my sort of third transition, my sort of third career transition. In my sort of 20s and early 30s, I was in the design and consultancy area, then moved into strategy and business development. And now I'm an entrepreneur on my own. And I'm now working. Yeah, I've launched a company called Consortium, which we can probably dig into soon. Yeah.
Absolutely. First question, where are you from and why Japan?
I was born in Melbourne in Australia. And I grew up there, went to university there. And then I had met my future wife there, actually, who is actually Japanese. And although I was able to find my own path in Australia, when I was very young, I was very much looking outward. I was not one of those guys that was doing typical Australian children's things, cultural things. I was looking at the F1 and being inspired by Europe. I'd spent a lot of time actually in Europe in my 20s, in particular in France. I'd spent a lot of time there, and I have, I guess, sort of a connected family there. So I actually thought I was going to spend a lot of my time in Europe, my life in Europe. But that didn't turn out that way. I actually ended up going to Asia through a personal reason. So I got married in Australia. Then I just moved to Japan. And that was about 20 years ago then. Japan was a very different place. I've definitely seen, and we'll dig into this, I think, in the episode, but there's definitely a lot of change that's happened since then. And yeah, going from Australia to Japan, that time was both quite a very life-changing experience, without a doubt. Just the place just changes you. It's hard to define, but yeah.
I was about to ask you, how was the cultural clash when you moved 20 years ago? Maybe by now it's 25 years ago from Australia and then to Japan. I've never been to Japan myself, full disclosure. So give me an overview. What was it 25 years ago?
I think for a Westerner, I'd assume most of your audience is perhaps in Europe, perhaps in North America. We've been educated. It's all baked into our education system, into our religious ethos, into our political system of logos and logic and reason and legality and all these sort of systems that we have. And that requires steps of procedures to get to a result in a way. At the same time, though, that process also allows us to innovate at a credible rate. I would definitely still say, having spent time in Japan, having spent time in Europe and coming through the Western education system, you'll see the pros and cons of both. But when you first get there, you don't see it that way. You see a surface of materiality, roads, infrastructure, that is all Western. It's basically Western in its way. But when you start to peel back the layers, you start to see something very different. You'll see a nuance that we couldn't even begin to imagine how we get to that result, where In Japan in particular, Singapore has its own way, China had its own way, and I was in China 10, 15 years ago. The Japanese place an immense amount of time on processes, on due diligence, even on a real estate deal. They'll spend even up to a year on due diligence on a commercial deal, as opposed to 1 to 2 months on anyone else might look at a deal that way. And a lot of consensus building. And so by the time you've got all that done, it looks like nothing's been done, actually. There's been no output. There's been no prototyping. There's been very little to show. But then all of a sudden, it all just comes together. And so finding a way to how that works and accepting that takes time to really begin what it means and how you fit in. And then as a foreign person, you've got to really then find your way into that. Japan is also a very hierarchical society, especially in the corporate space, in the government, in daily life, but in particular in the corporate space. And once you work that out, I definitely found the big difference when I first was there, left, came back more senior, more experienced, the different level you come in at. It definitely changes the game. But again, as a foreigner, you just need to know where you fit in all of this, accept it, and then it just tends to work out. Yeah, definitely. And that's in business, all across business.
How has it changed during the past 20 years? From when you arrived to now on a national scale, maybe also economically, there's a lot in the press going on regarding inflation, workforce, childbirth. What has happened during the past 20 years in a nutshell?
When I first got there, it felt that things hadn't progressed for about 10 or 15 years. It felt like it was still early 90s when I was there. So this is around early to mid 2000s is when I got there. And I'd been traveling there a few times too. In between that, I was spending a couple of weeks at a time before I permanently moved there. So in many ways, it was still very vibrant and fresh and everything. There weren't many tourists, hardly any tourists, actually. If you did see someone who was foreign, they most likely were living there. It did feel like a bit, sort of things had been set in a freezer. And now when we zoom back a bit, we can see the timeline a little bit. That period was definitely the sort of, I would call almost the bottom of the market. If we want to go back to, say, the 80s being the peak of that first peak they've got, things had sort of bottomed out by then. Although the currency exchange was quite strong, the yen was still very strong, things are actually more affordable than you would be led to believe. Some things like transportation have always been expensive in Japan, but I'm just talking about daily items, even food, far more affordable than you would think. And I think then you had the interest rates were like at minus by then. They were like -1%. So borrowing's still hard, but the rate is very favorable. And the property prices, I think by then had pretty much gotten close to, with that in the next sort of up to 2010, had already flattened out at the bottom. And I think it was a sort of a good 60% down off the peak by that time. Yeah, but there still was this sort of staleness in a sense, I think. Yeah.
Tell us about Tokyo. Where do people, also regarding affordable housing, residential, I know your focus is commercial, we will come to that, but my question is, Greater Tokyo area is like how many, 40, 30 million inhabitants. How is the city basically structured so that I am able to commute to maybe my day job in a corporate office and I still can make a living regarding residential property prices? And then the next question would be, do I rent or do I go for a long-term mortgage? How's the dynamic there in Tokyo and in Japan?
I'd definitely say before it was much easier, even up to 5 years ago, before COVID, it was still relatively easier to buy and do that commute. I definitely think there's been drastic changes in the last several years, the last 3 years. We'll go into that in a minute. But let's look at the area for itself for the moment. It's actually the Kanto Plain, which is probably one of the largest sort of flat areas of Japan. What people tend to forget is that Japan is predominantly, especially the main island, Honshu, it's about 85% forested and mountained. mountains and forests. It just makes living very difficult. And because of the seismic activity on the islands and then the rainfall with landslides and things, building on those mountains is just not feasible as well. I think in Europe, they've gotten around it that way to build on mountains, but you can't do that in Japan. So this led to this high density geography. And on top of that, you've got a lot of the head offices being set up there. Now, one thing to remember, a lot of the innovation in Japan is actually not in Tokyo. A lot of the major companies, household brands that you've heard of, Citizen and Subaru and these companies, and Panasonic, they actually come from outside of Tokyo. Some of them come from the countryside. A lot of them come from the Osaka area, actually. It's where a lot of the innovation has come from, the innovation and the entrepreneurialism. And then in the sort of in sort of Tokyo area, you've got it across actually 3 prefectures. So prefecture is like a state in Japan. We have 47 in total. And that's all around the Great Tokyo Bay Area. So that includes, so I could probably say it's 4. You've got Chiba, you have Saitama, then you have Tokyo, and then south of Tokyo, you have Kanagawa. So there's cities like Yokohama, which is a kind of a famous city you might have heard of, which is actually the capital city of Yokohama. And that has something like 8 million inhabitants just in Yokohama. And that's only a 30-minute express train ride to Tokyo. So you get these satellite cities in those areas, and then you'll get a lot of people living there, traveling into Tokyo for work. So obviously housing is more affordable in those areas. When you get outside what's called the C5, the Central 5 wards that are in central Tokyo, so that includes places like Minato-ku, where I live, Shibuya-ku, Shinagawa, I think, is in that ku, which is where Ginza is. Chiyoda-ku is where the palace is, and I think we've got I'm leaving one at Shinjuku as well. Yeah, the sort of the central 5, and those 5 areas are not only commercial buildings are there. You have a lot of government buildings, but also you do have residential. That's actually where you're seeing a lot of the price premiums now on residential stock, especially. And rentals, Japan is still very affordable when it comes to rental, although I think it is changing. I think there is some sort of unwritten social contracts in Japan, where if you lock in a lease with someone, they're not going to pretty much turn the rental price up on you at any particular time. If they're, especially the Japanese landlord, they won't do that. It's not really socially acceptable. Japanese view housing as more as a social right rather than, say, a property right, for example. They view things like security and housing as 2 fundamental values to who they are as a society, to create a very harmonious society. And so we can dig into this a little bit now, maybe, Michael, if you want, but we've had a lot of foreign investment in the last few years in Japan, in particular in Tokyo, around residential. And this has started to cause some social unrest in Japan lately.
Rental price versus average salary. Is it feasible to live in the metropolitan area? Is it easy to get like an apartment, or is it a very strong fight? I'm asking because I'm interviewing many people from around the world. If there's anything available in Zurich, Switzerland, you have to, I don't know, send an application from your past lives, maybe your 5 past lives, and the credit score, and then you are queuing in line with 500 other people. And same in Berlin right now. So I'm asking, how strong is the pressure there on the rental market right now for a normal average office worker, nothing special, and just someone who's looking like for a 1-bedroom or 2-bedroom apartment, even a room, because you might need a room because there's so much of pressure on it.
I think when it comes to rental and even purchasing, it's still okay because the interest rates are still low. So that isn't affecting rental prices drastically competitive. But where it is affecting is the other areas of cost of living, food, transport has gone up a little bit, clothing has gone up quite a bit, those sort of things that require more raw materials. The cost of new builds is becoming expensive. And especially, so this is more of obviously on the commercial side, but the cost of replacement now is becoming prohibitive. But if you're, say, as you mentioned, say maybe you've been working for 5 years in some kind of role, let's say, for example, you're earning about 4 to 5, maybe 5 million yen, which is something like around 38,000 US at the moment. You could live comfortably. Your rent might be, you've got like a 1 bedroom, kitchen, bathroom, studio. Let's say, for example, it's 45 minutes out away from central Tokyo. You're looking at 800 to 10,000, sorry, 100,000, maybe 120,000 yen a month, something like that. And you've got no one really drives to Japan. Japan is a very city that relies, Tokyo, and especially Tokyo, it relies on public transport to move its people around. So you still be doing okay on that. And in fact, borrowing is still very attractive as well.
If I go for a mortgage, is there the normal idea mortgage down payment of 20, 30%, 10% maybe, and then an interest rate of the Federal Reserve or the central bank, and then having a certain long-term plan of 30 years? Same structure, I believe. What's the term right now, what I get overall? I know it always depends from person to person.
Roughly the same structure. But the interest up until recently was actually a negative interest rate because the whole society, the whole country was under deflation. You were looking at, now it does vary a little bit if you're doing it as for investment purposes, just say you wanted to buy an apartment and put it on the market for a rental. The investor interest rate is higher just because, and also the conditions of borrowing that are different. But yeah, if you're got two people, buying an apartment is quite affordable. Buying a house, it becomes definitely a good 30 years you can plan for that. But I still think that itself isn't really the issue in Japan. The other issue is going to be it's the inflation costs that are affecting other parts of life. So that's going to make pressure there. The reason why the interest rates are still so low, that there has been asking a lot of pressure externally on Japan to raise the rates. But there's two reasons why rates are still at historic lows. The first reason is the debt to GDP ratio in Japan is still something like, I think, 260% now, one of the highest in the world. Japan has a productivity issue. It can't grow its way out of this. It's tried to, but it can't grow its way out. The productivity issue has more to do with its culture. I'll get to that later in a minute, but that's one reason. If they raise, the government is finished. Part two is most of the voting base is in their 50s to say 90s. Okay. Let's say a good chunk of that is close to retirement, whatever. They want their pension. They want to keep their cost of living down. So having low rates keeps everything far flat and keeps everything in minutes. So you've got this cycle now, I think, for the next 15 years at least, where it's still going to remain quite flat that way. Now Japan is debating immigration because its birth rate is one of the greatest declining in the world at the moment. So there's debates around immigration. Culturally, I don't see that working. I had a lot of trouble finding my way into Japan from a Western nation in the Eastern Hemisphere with a Japanese wife. If I had that much trouble, not to say that everyone will go through this experience, but I think if you've got other cultures who have even less skill sets to offer, it's going to be even worse. So that's a difficult issue. Automation, Japan is very slow to adopt to these things. As I think everyone has an image of Japan as being this highly autonomous and highly functioning and technically driven society. That's actually not true. That's actually quite a bit of there definitely is a lot of firsts and things like that, like the Shinkansen and other things like that. But there's a lot more bureaucracy in Japan than what's led to believe. Yeah, I think they're stuck. And I think the only way they can find a way forward is with foreign capital. And tourism has been one of these sort of things that have been trying out in the last few years. Tourism creates a benefit from Forex, so you're getting people changing into yen. That keeps the money printing down. The idea behind that, if you're a government trying to push tourism, you're trying to create currency exchange, right? And therefore you have to print less. So that keeps your inflation on track. That's what the one thing they're trying to do. they are getting huge amounts of foreign capital coming in on two levels. One level is going into M&A. So there's a huge push now for M&A. They've had mixed success recently, but the government has been pushing back on Japanese firms to be open to it. And then the other one is in commercial and in residential real estate.
In a nutshell, from me, from an outsider, and do I get it correctly that the inflation is basically happening because of, especially for foreign goods, because the yen decreased in value, so it's more expensive to buy those foreign goods in a different exchange rate. But then you have those incentives, those national or domestic incentives, then pushing up the deflation again, or having a low interest rate on mortgages, for example. Are those two big drivers? And then obviously wage also gets into or plays a big role regarding wage increase, but maybe only for a particular part of the society, the privileged ones. Are those elements, like in a nutshell, some of the key factors?
We can talk about wages. That's an important point. But the inflation, I think, where I have understood where it's coming from, it's part of it is material, raw material, but part of it also is labor demand. Because in particular in the building, in the new build area, in growth sectors, like hospitality is going through this huge demand for talent. I've got many people approached me who are looking at wanting to buy hotels, and I also do a lot of work with the Niseko Tourism Board. Niseko is a ski resort in Hokkaido, and I meet a lot of the business owners up there and the hoteliers. I mean, they have huge issues with talent, with finding resources, human resources. And then you've got this sort of labor concentration around Tokyo as well. So when it comes to construction, we're seeing issues where you get, like, say, there's an opportunity to go into an investment with a forward commitment. You go in on the first phase and you're getting the land title, and then you've got the developer lined up. So the developer has everything ready. And then you work with the developer and you go through your process. But what developers are doing now is they're saying, you want to put an extra 20 to 25% on top of this, on that forward commitment, because there will be increases, a buffer increase on cost for inflation. And that's mostly to do with labor. And then the other thing that's impacting that, Michael, is Japan has been asked, I think it's been asked by the US, but I think it's also taking the initiative a little bit himself of reshoring a lot of its tech, in particular, my chips, data storage. So this is where there's been a lot of emphasis and focus has been on data storage, on chip plants and so forth. So a lot of that labor is going into those fields, are being prioritized at the moment. Wages have been flat pretty much in Japan for many years, decades. Only recently there's been some general increases, but they've been quite minimal. And it's interesting. I don't know why you'd think then if you got inflation areas, why isn't inflation coming into it in wages? I don't know the answer to that, frankly. But that's not the only, I think we've seen that happen in other markets so as well. I know Australia has got a really huge price wage to affordability ratio is immense there. I think it's like a 5 or 6x now. Yeah, Japan is less than that, but it's increased in the last few years because we're seeing land values go up as well. So that's something I'm looking at, because that also then ends up affecting where yields are going to come from, rental yields, cap rates, things like that.
Let's talk about your development company and your commercial company. Give us an overview.
Yeah, this is something that when I started the company, it was more focused around placemaking. So I just mentioned, I highlighted before, I've been working with the tourism board up there now for about 2 years, and I'd been doing some consulting work for them. And then we went through some repositioning exercises and we worked through that. Why do they need that? Niseko has a bit of a reputation for itself. It has quite a good reputation. The reputation was very much fundamentally around winter. And so what that was causing them, it was causing this supply tension where all of the energy and resources of the location of the area was going into 3 months of the year. And when you visit that place in summertime, it's actually a lot better in a way. You don't have all the amazing skiing and conditions like that, but it has this other beauty to it. We've been working now around not only creating more of a year-round platform, but one of the big things I put forward to them was they were known as a resort, and I've got them now to rethink it as a region, because actually the remit covers three towns basically, which make us what's called a sub-prefecture. So we've used that as a sort of as our canvas, and we've just this year gone into now working with them around the place branding side of things. So the initial way the company started was in that space, and then I started being approached by a few developers. And real estate agents were talking to me and said, hey, look, your skills are very interchangeable. You should look at project marketing as a way in. And I looked around, okay, what does a project marketing service look like? What do they do with the developers? Okay, I've done that in the past. I've done feasibility, I've done analysis. There was obviously new things I had to learn. How do you work through gross development values? How do you calculate gross floor areas? You start getting all the metrics out, and then you start playing with them, and you start working things through that. And then the second part of that equation was I started thinking a bit like an investor. As I mentioned before, the acquisition work I help with, I'm the broker, but I've got an agent on my other side, a Japanese agent, but we're introducing commercial deals through investment. So family offices, a few high net worth individuals, development groups, and then also REITs as well. And so I've got to think on their language. I'm going to think on their terms. So I won't just simply try and present the deal to them. I'll take their brief in what they're trying to look at. And we have you're getting a bit of mixed bag there, Michael, because you get some people who have a very clear idea about Japan in the sense that they know it's different. They want to do something that makes a result. But we do get some people who are thinking that it's just like where they've come from, and they're approaching it in that way. And so then what happened was I started then getting some inbound leads, some cold inbound leads of people in other parts of the world as well, approaching me and saying, hey, Simon, we like your approach. Can we start collaborating together? And what I did there was, if you look at these services that are offered there are a lot of independent services who are doing project marketing for developers, but there also are some major players like CBRE and Savills. They have that sort of smaller in-house service they do for this. And so how do I disrupt that? How do I use first principles thinking, find better ways to actually get to the problem there? And I work that way. And in particularly in Asia, I found that to be, my approach is far more, I would call it modular. And that modularity allows me to give them one thing at once or break it up into small parts and then let them take it on board their way. And I've gotten some quite good feedback from people who I'm working with on that, because they said, Simon, you're far more approachable and easy to work with. They've worked with some major consulting firms, and they had they felt very locked in that space. So really what we do there is I have a bunch of partners now. I have partners in evaluation. We have architect firms. Some of those architect firms have actually reached out to me. They said, hey, look, we like what you're doing. Can we partner? I have a master planner, incredible master planner from Italy, who we're hoping to do some exciting things together. Management groups, hotel operation groups, who are looking for buyers to come in and they would manage things for them. So all these sort of things, I've been able to put this network together. And this is hence the name of the consortium company. We act as a consortium of sorts, we collaborate, and then we go out and we modularize that service down depending on the project.
Okay, thank you for the explanation. In detail, where do you step in and where do you bring the people together, facilitate, and provide by that also the value? Can you maybe give us an overview of an example? Someone reaches out to you, and from there, how is the process?
Yeah, we have two distinct profiles that we work with. One is for acquisitions. So the service we provide there is more on the advisory side. It's quite different, and I'll go into that in a minute first. And the second side is for the developers. So these are property developers. So two very distinctive groups, but both involved in real estate. One's in the acquisition of real estate, the other one is actually in the creation of an asset. So with the acquisition side, This was actually something that I had fallen into. It was a request that came to me from a brokerage actually in Malaysia. And I met this individual in Hong Kong. He said, Simon, I've got a lot of people I know who want to move into Japan. Can you help? So I started to look into it and said, look, I think I can help. So a process would work like this. We have on that side, from the investor side, we have high net worth individuals, REITs, family offices, and then you might have ownership or development groups. These are people who are holding large amounts of commercial real estate. And in some parts, they're developing them, and other parts, they're just managing them. The way I work with them is obviously those introductions don't just come about naturally. You can't just, it's quite hard to naturally get a cold introduction to those people. Or you can approach them. I have done that as well, and it has been okay. But usually we just do a call. I take an onboarding sheet. So I go through them as an investor. What are they what do they currently have? What are they currently looking for? And that includes not only the physical asset, but I'm looking at things like kind of metrics, what kind of return rates are looking for, cap rates, yields, these sort of things. I'm starting to work through that as well. Then I have Japan, real estate in Japan, especially commercial real estate, 99% of it is off market, where basically it's not advertised, it's not promoted, it's not publicized. So you're only going to get access to those deals if you know the owner somehow. And what I discovered in the first instance of this, the first 12 months, was I was number 4 or 5 on the chain. And so it became very difficult when you're trying to help a foreign investor come into this space, because they're asking very pointed questions, and very naturally pointed questions. And this information is not really contained when you're working with a Japanese broker. Japanese brokers are far more transactional. They're holding things. So to get around that, what I started to do is form my own relationships. And I've done that now with direct access to one person in between. And we have then direct access to asset managers or the owners. And so what I'm doing then in that instance is we're preparing a property report. I'll take the data that I get about the property, compiling it into a report. The initial report is very simple. It's very top line. Once I get some feedback of interest in that, I then go deeper into it and I provide more of an analysis, competitive set, area profile, data trends, things like that. I start giving more of a profile on it. And then once we get going there, if they're interested, they move into a confidentiality agreement. Then they start due diligence. In that stage, I'm just simply an outside point, because what's happening is the potential buyer is then working with the sales side in that case. So we're just intermediaries between the buyer side and the sales side, okay? Once that due diligence phase is finished and everything looks good, usually the buyer then enters into a LOI and they submit a bid. Now, the tricky part with Japan is just because your bid, even if your bid is above asking price, doesn't necessarily mean you'll secure the deal. In fact, it could actually be seen as a bit of a turnoff. Owners are very cautious and careful about who they want to sell to, actually. And so they're looking for a track record or a commitment from the new owner to the market, especially if it's going from Japanese to a foreign owner. That's normally the case. So there's a lot of variables in that process, Michael. We just do our best to try and get access to some of these deals and help filter them down and then get them as quickly presented to the investor as fast as we can. And that's really what we try to do there. And then obviously there's a lot of legal parameters around Japan that we provide guidance on. And we do that very simply. We don't overcomplicate that, but we just provide those details when they're needed. But those sometimes around things like structures. So you have 2 different scenarios in Japan. Even though there is a lot of freehold properties, title ownership goes to the owner. When you get into commercial deals, a lot of that isn't the case. It's a rights transfer. And usually when you're looking at excess of, say, 30 million US, and I get sometimes deals of 100 million US to even $250,000. And recently I've got a deal on the table at the moment that is 500 million plus US. It's a rights transfer deal. So the land title stays with the current owner. There is a lease on top of that, and there's an asset on top of that. You're simply leasing the use of the building for a period of time. The transaction price is that price. And therefore, then you make your yield through the borrowing capability and then through rental return on the tenancy. Okay. So that's the commercial side. I've got to be abreast of those issues, and I have to be thinking about that. And I've brought on a Japanese partner now to help with the legal side of things, to actually transfer to conclude the deals. So we have a legal side there. We have a broker side, an agent side that helps me finalize those. For the project marketing work, Michael, things come about very differently. 2 examples I can give very briefly would be one developer I'm working with in Vietnam. They're actually more experienced and they have projects underway, very large scale residential work they're doing. They have they have an in-house team, but they've asked me to come on board in a few areas. The first area is to become the sales agent for them, a distribution agent, international distribution agent, which we're now going through that process at the moment. And I'll be launching a new platform to help with that, because the consortium platform, the consortium company, is around commercial, not around residential and consumer. So it needs its own platform. But also those guys are asking me with investor relations, so to help them work on JV deals and new developments they have, which require operational licensing for hotel groups. So I'll be working with them quite early in the development stage, and hopefully some master planning work as well. We have my master planner connection I mentioned before, who will come in and help, will consult around those pieces. And other times though, some processes are a bit simpler when it's a bit more modular. So we're doing some feasibility work, or we're going to the site, they've found a land site, they're asking my opinion, what could we do here? What concept could be good? And so in those cases, in a place like Bali, you need to be abreast of where people are wanting to go and stay, what are the trends, what's the growth looking, and so forth. And then to give the right kind of advice around how you would then begin developing that project, and then how would you market it as well. And that's one thing I've been working with a developer there in Bali, in particular in the business model. I work with them on their business model, which is a bit linear, and I've given a lot more dimension to their business model. And that was a way for them to build trust with me. And going forward, there'll be a range of launch tactics we'll be doing. And then they've asked me to come on as a master sales agent there as well. So that's really the 2 parts of the business.
Let me ask one quick question. You said 500 million or 500 billion of the one project of the
million.
Okay.
Yes.
Okay.
500 million. Yeah,
that was one of the.
Yeah.
I just want to make sure. And the deal flow, how do you get all the inventory? Is it that you have your...
Yeah.
Because I assume you start with having a listing or one project, and then you go out and approach the potential buyers, or is that the other way around?
For me, it worked very differently, and it worked... Maybe there was a bit of luck, because I had a bunch of buyers and I'd been introduced to them, family offices and the REIT from Singapore and so forth. And then they told me what they were looking for. And then I went out to find it. And in the process there, I found a broker. And that broker had a partner. And that partner and I now have formed quite a good relationship. I think he liked the way I worked and my processes and the professionalism I was trying to bring, the clarity I was trying to bring to the deal. Because this was really a big friction point for foreign investors, that they weren't really getting the answers they were looking for when they're dealing with the local market here. Now, it just so happened that person also was connected to a couple of people in Tokyo, and we get very confidential off-market opportunities shared with me. And to the point where actually it became a challenge on my side, because I was getting quite large deals presented to me that I didn't have the right buyer profile matched to it. My buyer profile was going only up to 100 million. Some deals were looking at quarter of a billion. That's now, and I hadn't done much work on beginning to source those new buyers. I had spent not much time because I was juggling too many different things. But recently I've gone through a complete repositioning and purposing of the company. And we'll be now looking at those offshore partners who have the capital, who can come in and credibly acquire something like this, because there were quite nice deals in Kyoto, in Osaka, and in Tokyo. But they need very strong, credible buyers to come in to conclude those deals.
Where do you think the market is heading during the next couple of months? maybe 48 months, maybe even a couple of years?
I think on the commercial side was a lot of changing hands as opposed to new builds coming into the market from offshore. I've seen the numbers of some, and then a lot of first-time investment coming in. There are new projects happening in Tokyo, for example. There's some great larger projects happening, but these projects had already been in the pipeline for several years now. Okay, so they're coming to their conclusion, and there's some very lovely projects happening in Tokyo. So commercially, we're going to see still an upward trend and demand, but we're going to see a lot of changing, a lot of cycling. I think people who have been in the market now, especially foreign investors who have been holding on to things, have bought maybe 5 years ago, even 3 years ago, who have held on to a few things, they may be considering exiting a little bit earlier to change over, maybe to take some money. Some of those people probably came in with a different intent. They were probably looking at the currency arbitrage as opposed to the long-term fundamentals of the market. Japan is a market where it's stability market. It's not one of these growth markets. So what was attractive was the yen depreciation to the yen trade, and if you're able to borrow locally, the low interest rate, it gave you a good cap rate, right? It gave you an advantage on a cap rate. But if those people have bought assets that haven't been performing so well, they'll probably want to be looking at getting rid of them. On the residential side, I think domestically, we're going to still see things go steady as it is. The foreign investors who have been coming in buying residential, you're going to see a lot of pushback against that. I think there's interesting stories I'm hearing on two parts of there, Michael. There's two key markets in residential. One is the sort of the inner city or inner areas, which are relatively new build, right? 20-something years. A bit like Switzerland. I know there are older buildings in Switzerland, but Japan has strong depreciation. The average building period is about 30 to 40 years, and then it's demolished and recycled. You don't get a lot of older buildings in Japan. But what you'll have also is this Akiya market, which is an abandoned home market. Now, this market has been around for many years. And when I first came to Japan, I saw countless foreclosed deals. There were websites dedicated to all the foreclosed properties. And the attraction it was a very low asking price. I'm talking about 8,000 US to buy an apartment on the sea kind of thing. But it came with debt. It came with baggage. It came with outstanding property taxes, building taxes, and so forth. However, what's happened in the last 5 or so years, you've had a lot of people, like with YouTube and so forth, go on YouTube and promote these deals, promote these Akiyas, these abandoned homes, especially to foreigners who think it's very romantic to go to Japan to buy something at about 30 to 40 to up to 100K and have a holiday home, or they think they're going to make it an Airbnb and convert it into an Airbnb. And what they've been misled is they've been misled that they have then access to live in Japan, which is not the case. Now, what's happened there is that the Japanese don't want to buy these properties. They're actually very far away, or they're not in very convenient locations. And these people now, because there's been massive visa changes, there was a visa that has been manipulated, probably fair to say, mostly by Chinese nationals, but not only them, it's been also manipulated by other people who have used it as a way to sort of a temporary company that is apparently a property management company, but it employs no people and has no income. It's just there, and they're able to take advantage of living in Japan that way. But that's all coming to an end now in October, where the new laws kick in. And so these people will now be holding on to assets that they won't really appreciate. They won't appreciate. They probably won't deflate, but they won't appreciate. And they'll struggle to find a buyer. Maybe another foreign buyer will buy it, but that's about it. So that's that sort of that regional market or secondary market. The primary markets are still going to be strong, especially Tokyo. If you buy an apartment in Tokyo, you're still going to get some nice yield. Your yield's going to be 2 to 3%. Okay, nothing more than 2% is probably a fair price. But if you go out further, you'll get better yields. And even if you're able to pick certain locations in Hokkaido, for example, you get even stronger yields up to 8 to 10%. That's possible. But your tenancy profile is riskier. So there's a cash flow risk on that side.
I have a question from a foreign point of view. Interest rates in the US are around, I don't know, between 8 and 10%, let's say. In Latin America, it's between 10 and 12 or even 15% right now. And then we have Japan, which is a total outlier. Additionally, we have the yen, which definitely has a good conversion rate from, let's say, US point of view, US dollar or euro point of view. So if I get a local bank which gives me a mortgage, I actually have a very nice arbitrage game because I can then choose yield generating or, I don't know, return investment generating, cash flow generating property, and I don't pay to third parties such as banks. Is that possible, or am I missing something in my thought process?
No, it's the right way to think. The tricky part will be getting that financing. So I think there are a few places that are offering offshore financing through Japanese banks at that rate, but I don't quite know. I think Singapore was something. I think I heard Singapore was one place where that was happening. I don't know what the current status of that is at the moment, and I don't know where that will go in the future. And I would expect some pushback on that in the next few years because I think that it's a very sensitive topic at the moment. There's been the last election in Japan was, I think, August. Yeah, it was last month. You saw a lot of domestic tension around tourism, around foreign ownership. I've heard stories of people buying property and then doubling the rent overnight kind of thing. It's just an unheard of thing in Japan to do. But yeah, some of those people, whether they're borrowing offshore or I think for them to borrow locally, it's impossible. You need to have, pardon me, you need a permanent residency status to borrow if you're not Japanese. Okay. So that is even getting a credit card. You can't get a credit card unless you're getting it through a spouse or something like this. Yes, so that is possible. But the people I've been working with have obviously been coming with cash. They've got obviously borrowing, getting that money elsewhere, and then they're looking at the arbitrage on the other side.
Makes sense. Regarding visa, you just mentioned the word. Is there any golden visa scheme? Is there anything that I say I invest into? I don't know. Nothing. Okay, so I don't get any residency with an investment, with a real estate investment.
No, and I frankly don't think anyone should get a visa because of that purpose. We've had there was a startup visa. There's a startup visa which had it had a price point of about 5 million yen, which is about 38,000 US roughly. And then you had to then set up a company, but there was no other requirements around that, just besides setting up the company. And then you're getting people coming in with that, and then they were buying real estate. Mostly this was happening through Chinese nationals. I don't know the period of the visa. I don't know if it's a 2-year visa or a 3-year visa or a 5-year. I'm not quite sure. But they weren't actually operating anything. And you had people too doing it with Airbnb and this sort of stuff as well. It wasn't just only Chinese, but most of them were that. And then what's happened now is there's been a huge pushback on that. Even with Airbnb, Michael, Japanese don't want Airbnb in Japan. They're under the opinion that if you're going to go and visit a country, you stay in a hotel. Why would you want to stay in someone's house and then all of a sudden be part of the neighborhood? They don't want that. They don't want people walking around with suitcases. There's a whole culture around neighborhood in Japan, which is very difficult to define. But there are these unwritten rules in neighborhoods and in villages and everywhere in Japan. The rules matter more. These cultural rules matter more than the law. You could break a law and maybe if it was something not that serious, you could probably get away with it a little bit. But if you break these cultural norms, you're really asking for a lot of trouble. So they don't want that there. What's happened now is that they've now raised that limit to 330 million. So it's around about 260,000, 270,000 now for this visa. And you need to hire 2 locals. And I think they're going to put a language requirement on it as well. And you need to show cash flow. You need to show positive or negative cash flow. So what's going to happen now is a lot of people who have been doing this for the last few years, they'll be forced to they don't have to sell their assets. They can leave them there, but they won't be making any money out of them. And they can just go and visit them for 30 days, and then leave and come back. They can do that, but they're not entitled to anything else. Japan has definitely put a line in the sand with this. And this has happened elsewhere. It's happened in Singapore. It's happened in Thailand. It's happening in a lot of other markets in Asia. And yeah, the predominant driver is, I think there's two major drivers of this is the Chinese leaving China. And the other part of it is, I would call them digital nomads, which to me is just another word. I've got my own opinion on digital nomads, Michael. I find them a bit more illegal immigrants, but they're just obviously working. But they're in the country, they're not paying taxes, they're not investing into the market, they're not buying or building the business, they're just piggybacking off the infrastructure. So that's illegal to me. And that's what you've seen now, pushback on this, pushback on the banking system. And I think people who are doing that with property are now getting the brunt of this for next month.
Simon, thank you so much for the conversation. I learned a lot. You gave us a very nice intro, at least for me, to Japan. You gave us a very nice overview of the evolution during the past 20 years when you stepped into the country for the first time, maybe even 25 years, how it has evolved. You gave us a very nice overview of Tokyo and the metropolitan area, which obviously with its 40 million is humongous. Only about this one we could talk for hours. About the residential market, prices, affordability, transportation. You gave us a very nice overview also on the culture and how Japanese people live and work and by which rules they live. You gave us a very good explanation of your business, your services you are conducting and offering, and also walked us through 2 use cases from investment points of views. And finally, you gave us some legal, visa, investment, and monetary insights from someone who's there locally, not by a Japanese national, but still by someone who is very insightful. Is there anything else you would like to mention to the audience which we haven't touched upon?
No, I think if you have time, if you are in Europe, I don't do come out to Asia. It's a very different dynamic. Maybe just even from an architectural build perspective, the way that things are done here is just completely different to how they're done in Europe or even in the US. And there's, in a sense, really incredible. The people in this part of Europe, and they look at the stability and the history, and they look at the craftsmanship, and they have incredible admiration for that as well. So there's this very interesting tension and dynamic that happens in this part of the world. And people also here are very commercially minded. And so that is a dynamic you have to work with. And once you get into that groove, you can see the benefit of it.
Perfect. Simon, thank you so much. How can people reach out to you if they're interested to get in contact with you?
Sure. They can find me on LinkedIn. They can follow me on LinkedIn. It's just Simon Clancy. And you'll see me, if there's any other Simon Clancy, you'll see me that I'm in Tokyo and I'm at Consortium. Or they can go to the Consortium website, which is cpg-asia.com. So Consortium Property Group Asia, which is cpg-asia.com.
Perfect. I will put those also into the show notes so that people can directly contact you. Simon, thank you so much for your time and sending the best regards and a big hug to Japan.
Thanks, Michael. That's very kind of you. And hopefully we'll chat again soon.
Absolutely. Thank you. Bye-bye.
Take care.
This video is brought to you by HalloCasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description.